The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman. Exciting day today, 29th of April. My pleasure to be here Monday through Friday. And, of course, great shows before mine. I hope I can keep up that standard. This is one doozy of a market. Dow's down 115 at 17,715. S&P's down 14 at 2,061. You've got the comp index down only 38. It had its smash already at 47.68. The VIX index is at 1633, up 1.11. Been speaking about that a lot for subscribers. The E-minis right now down 16 at 2,055. Made a peak D right there that 2,000, it was at 2105.25 on the 21st. And the MACD stochastic are deteriorating, absolutely a peak A in the weekly chart. That's amazing. 17.3% rally. You have to expect some kind of pullback. And the 120-minute chart shows leg C to the downside. Interesting. Did I miss that? 2094.25. No, I didn't. And yep, leg C to the downside. Now let me get rid of this because I need to show you a bunch of things here. One of the reasons why we've been short the Dow and actually long and increased our long positions in gold, I'll go through it very slowly here. Let me just, as we're doing this, let me just show you the QQQ series, down 105.51, down 77%. Huge peak E top with the MACD and stochastic just starting to get to some kind of support level. Massive pullback after the peak A in the weekly chart, and that monthly chart is going to be really important. Let me get rid of this for the moment. Now I want to go to the IWM. I want to show you a couple of interesting things. IWM made its peak D. That's the Russell 2000. It was acting weaker than the other markets. Then over the last couple of days, it was acting slightly stronger. I think because it has oil stocks in it, and it's still leg B. It's not a peak yet in the weekly chart. This is going to be fascinating, the way we rotate through a whole bunch of things in this market. So the Russell 2000, I wonder if I've got my IWB still. Maybe I lost the notation. No, there it is. Look at this. EF makes a peak F in the daily, pulls back. This is now the 1,000, the iShares, Russell 1000. It has made a peak. Interesting. 89, 87. This is peak B. Funny how they all doing different things in the weekly charts. So yeah, you've got a leg B making a peak B in the weekly chart of the Russell 1000. Let's look at the MDY. I think is that the mid caps MDY? Yep, mid cap just made a peak D, pulling back, not as severe as some of the other indices. And leg D still in the weekly chart. Those monthly charts, maybe in the show, I'll be able to get to that. I had a bunch of questions I'm going to try to get to. Let me do this right now because I was asked about the TRIN. It's important to be able to discuss it in a cogent way. I'll try my best. Let me show you this chart right here. You see, this is the Richard Arms TRIN index, short-term trading index. I use it completely different. I don't even know how he uses it anymore. It doesn't matter to me. I use it. It's my tool. I use it only for certain numbers. And you'll see I've X'd out. Where was it? There was an X over here where we missed. This has got an unbelievable record based on this Chapman Wave TRIN gauge that I use Richard Arms TRIN index for. And it's trading now at 0.80. Now, there are a whole bunch of ways of looking at it. I'm not really interested in the ways of looking at it. I'm only interested in the numbers. I'm not going to even discuss what the numbers are. I promise that's out of all the technical tools that I have, just the one thing that I'm not going to give out the numbers because they could change, and I don't want anybody stuck with numbers that can change. So I have certain numbers that I stick with, and that TRIN index, when it gets very low, let's just say very low, within the very next session, the Dow is going to pull back, even if the futures are up huge during the day or into the close. or overnight or in the next morning, that morning there will be a pullback. And it's not failed. We thought it had failed once, and then at the end of the day, it turned around and went. Usually it's in the morning, but it can be any time during the day. Most of the time, it's first thing in the morning. I call it the rug pull. If it goes over a certain level, you can expect that within 2 days, there's going to be a very sharp 9 to 11 point E-mini futures rally, and that's going to impact the cash indices positively. Why is that important? Because sometimes it looks like everything's just, they're throwing the baby with the bathwater out. That's when you got to be careful, because if you've already got that flashing and it didn't give an overnight signal like it did yesterday, going into yesterday morning, where the futures were up over 9 points at one point from the lows of the previous day, and then you got that rebound, and then you got, of course, the turnaround later in the day. It gives you a heads up, and that also has a fabulous over 95% accuracy rate. It's actually more than that, but I'm trying to be very strict with that as a rule. So it's succeeded every time, but it hasn't always been exactly from, how can I put it? It has occurred from a much lower low, but it's giving you a huge rebound. So that part of the accuracy is there. Now, I just wanted to discuss that as the trend, my way of reading the trend index, and that applies to the S&P. When it's very high, it applies to the S&P futures, which should impact the S&P cash. Good. Okay. Now, I want to show you something. Why did I go long, add to the positions yesterday in the gold? Because we were right here on the previous day, right there. And my thinking was that the gold contract has succeeded so many times in holding that red support level and the green Chapman wave inside track buy zone, that it was essentially saying to me that if the MACD could continue just barely moving higher but did not break down, and the price was starting to make higher highs and higher lows, that we could in fact see a very quick sharp move to the upside in gold. And now look what's happening. We're about to bump into some kind of resistance here. I'm making this green. I'm making this red. And you'll see what I'm doing here. What I'm doing is I'm trying to give you an inside track resistance area. So that's the way I'm looking at it right now. So that means gold is acting extremely well. It's up 24.50 at 1291. I'm not sure if I'm 100%. I am usually a little bit behind on that particular contract. Let me double check here. Yep, up 27.19. Yep, that's exactly. Oh, up 27. It's even more. It's up at 1294. And you've got leg E starting in the weekly. I'm going to be conservative, call it an E. And look at this leg A in the monthly. I never expected that we would see something so strong in such a single move to the upside. 1, 2, 3. This is the fourth month. It doesn't matter where April closes. This is the fourth month with a high bar in the monthly chart. I'm kind of impressed. I must tell you, I'm very impressed. So that's there. Silver is trading right now at, let me see, silver's up 0.33 at 17.92. It's making leg E. I want to do crude oil. Crude oil is trading at 46.25. It's still leg C. I still think crude oil is going a little higher. And we'll go to bonds. And then when we get back, we'll go to the nitty-gritties of questions I was asked. Bonds are down a little bit.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So Dow's now down 122, S&P's down 14. I said I'd look at the bonds, but just as I'm going there, I have the chart of GILD, Gilead Sciences, down 7% at 89.58, having made a peak D in the weekly, in the daily. Weekly is just a leg B and has pulled back. And that peak F, I think, is a major top in the Gilead Sciences monthly chart. I've got hat-trick tops in so many of these biotechs and the IBB. Let me just do this. We went back to short at about just a little higher than the price that we originally got out of our huge long position from 393.10, huge in terms of time. It was really a small position, but hey, 111 points. And we got back in, and now at 282.59, we're back to a small short, and it's trading at 268. I mean, this is a market that in some sectors you've got to take real seriously on the downside, and now we're starting to see on the upside some other sectors. I got an email here saying, hey, Basil, hope you've been well. Excellent. Yep, I've been great. Thank you. Excellent call on the index short. Thank you. I have two questions for you. One, is the top in your opinion? Oh, boy, is that a good question. I'll try to get to that. Number two, I've been playing commodity futures long with good success. I'm trying better to hold my winners longer and not get shaken out of my trades. It's my biggest weakness. And let me tell you, it happens to me as well. It's tough sometimes, especially when you have subscribers and you absolutely do not want them taking 30, 40% losses. You want small little losses because you can always make it up. Anyway, but it's a good thing if you're doing that. On the flip side, if I see the beginning of a strong trend, I'm trying to hop on board and have been attempting to get into soybeans long and hold my crude long. Let me just have a look at soybeans. Remember, I still said it should go to a leg D yesterday, and it made the D. Now soy is a little bit toppy short term. It's making a peak D. I suspect at 10.25, down 3 today. I think it could put back to 998, but my guess is that if there is a little bit of weakness here, it'll take more time than price. Between 998 to 982 would be the cushion that I think it needs to hold based on the daily. The weekly says a little bit lower, 953. I don't think so. I think that the commodities are actually in play, at least for the moment. Hope that helps you there. So please give me a good ZS long. ZS? Let me just put ZSM in to see what I'm talking about. I don't know what ZS is. ZS. Is it talking about ZS? S. Oh, I think it means as S. Okay. Well, that I just did that. That's soybeans. Okay. Also, so many folks are cautioning against the short-term top in oil. It's come too far, too fast, etc. But I'm tempted to hold my small position in crude oil with a stop below the weekly, as it just keeps popping up every time I'm tempted to sell. I'm saying hold it for now. We'll deal with it early next week, but at least for now, if I'm correct, the CL is in leg C, so it should still go to a D. Now I've drawn the left side, right side price time match, and that says the crude oil should 47.32 is going to be the area where there could be some resistance. Let's look at the USO. USO. Sorry about that. We were in the SOX, the short term, 2 times short the, the short of the semis, and someone said, it is rocking. Yeah, but we got stopped out and now it's rocking. Oh, well, it happens. So the USO is a little different. I've got a leg E, but the MACD is still good. Stochastic's at 90%. I think that based on the USO, we might have a little bit of a pullback. There maybe one more pop to get that leg D in the continuous contract, but the USO itself says it is acting very well at 11.29, up 6 cents, but you can expect a pullback to take place. $11 to 10.88 with 1071 would be the stop. That's the area that I'd be looking at it if you wanted to add to a position. Just if you're in the position, you can hold off. We'll deal with it again early next week. These are mini positions, and I'm just starting out in commodity futures, so I don't have much experience. Do most folks just use daily charts for commodity future entries and exits? Thanks, Basil. Chris, I'm just going to say to you that this is a new move in the commodities that we haven't seen the likes of in a long time, if I'm correct. And I'm just going to go, if you don't mind, I'm going to go to this TRCCI. This is the Reuters. Thomson Reuters Continuous Commodity Index monthly with a Chapman wave notation. Leg A up in the monthly, but it's really this massive leg C that is so impressive. And I think that, and I've got a D, a snap up pop to a D on a Friday. I always think that that's a little bit of a tip off that early next week we should see some kind of a pullback. So here's my thinking. I love the fact that you're doing it well. I love the fact that you're trying to overcome a particular discipline. And Chris, I love the fact, absolutely love the fact that you started with small positions. You know what happens? The technique is exactly the same. The mental strategy is just completely different. So you could be doing exactly what you'd normally do for your smaller trade, but you start doubling and adding to that. It's a psychological picture because it moves so quickly. The numbers move quickly, but the positions should stay the same and the chart should stay the same. Stay small, add very slowly. We've got someone in the den who used to use one contract. He's up to 2-3 contracts now. It's fantastic, and he's unbelievable. And I might add, he uses the Chapman wave. Thank you. So let's go to Mike in Ormond Beach. Mike, how are you?
Hey, Baz, I'm doing great. I work a lot of hours. It's really hard a lot of times for me to, watch the markets and everything. But I've got a position in the dog, and I was wondering where you think I should get out at.
So let me just tell the folks, the dog, folks, is the SPDR Dow Jones Industrial Average ETF. It is 1-to-1, and it actually is really good. Let me see if I can find the chart right. Oh, I'm not going to be able to find the chart. It's hidden away there. Maybe I think it's there. Let me just see if I can find it. Right. Is that it? No. Okay, I'll find it just now. But it's 1-to-1 with the Dow. Oh, here it is. I knew I had it. Right here. And you'll see that it has a beautiful inflection. It looks like very close to a mirror image of the diamonds. Here's the dog on top. Here's the diamonds at the bottom. And you can see the mirror image. The Dow is in leg B in the daily chart of the dog. And it is now in leg B to the downside in the daily. So, okay, now this is what I'm going to recommend. I believe, if I'm correct, I'm going to pull up this chart. You might not be able to see it, but this is the template we've been using in my opening call, and we went short based on a number of factors, but the fact that we went to a peak D in the daily and now we've crossed under the 200-period exponential moving average. So you are at work. So I'm going to do two things. Mike, I'm going to suggest this is a position you've got to be prepared that it could bounce to the Dow is at 17,698. It could bounce early next week to the 200-period moving average and even a little bit above it. But I suspect that even if it does that at 17,860 or so, the Dow is going to reverse and come back down. And I think for now, it's going to be making lower lows and lower highs. So your question really is, what should I be doing in terms of holding the position, not being able to watch it? And I'm going to say to you, do you have time to hold on through the break?
Yes, I do right now.
Okay. I'd like to just answer it very specifically, and I'll tell you what I'd look for and where I would maybe add and where I would be a little bit cautious. So I'll be right back with Mike and Brent straight after this break. Dow's down 132, S&P's down 17. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and we're on with Mike in Ormond Beach, Florida, and the question is about the market itself, basically the Dow. Essentially, what we're looking at is the inversion of the diamonds, Dow diamonds, which goes with the Dow itself. This is the inverse, the DOG. And I just showed the chart, if I show it again, this chart over here that shows a beautiful mirror image. Unlike many of the other ETFs, the SH, which is the S&P 1-to-1, and the DOG are just fabulous instruments. So this is what I'm going to say, Mike. At least for now, I'm very comfortable saying that the pattern that's matching the template from the May high of 18,351 last year, as it broke the 200-period moving average, and the November high of 17,977. Thus far, it's matching, but you've got to anticipate if it's going to match, it's going to also try to bounce over the 20-period moving average. I'm going to just say to you, at least for now, I believe that there should be much more downside action. It's either time or price and time. My thinking here is that the whole area of 17,500 to 17,300, to me, that's going to be absolutely key. Is that where we have another really big bounce, go to all-time highs, or is that it for now, at least for the next 6 or 8 weeks in the market? But I'm comfortable saying to you, if you got in the DOG quite a bit lower than where it's trading right now, I'd be comfortable saying, what price did you get in at?
I scaled in between 2140 and 2150.
Okay, so you've got about a 300-point move in the Dow that would take you out. I'm just going to say, hold it for now. I'm going to be covering it again Monday and Tuesday, obviously. Even though there could be a bounce today, I think this is a big surprise to a lot of people. The sudden turn down with those quick rallies to the upside. My thinking here is we've got at least another week of backing and filling to see whether or not that whole 17,600 to 17,550 area can hold. If that goes quickly, then I'm very comfortable saying, just keep holding it right now. If there's a bounce, then I'm just going to say to you, yes, we could rally further than you'd like, but I think that the top that we made on the 20th at 18,167 is a top, at least a short-term top, and probably more an intermediate-term top. So I'm comfortable saying that to you. But most important thing is DOG doesn't go crazy. It really trades very respectful. I like it. Right. It's a nice instrument to use, and you can always add to the position. And especially if you're at work, you really don't need the 3 times the 300% movers. It's too difficult. So I'm saying stay with us, and we'll talk about it again on Tuesday if you want. But at this particular point, fact that it broke under the 20-period moving average yesterday was exactly what we wanted on the 6th day from the top. I'm comfortable with that. You can never be totally comfortable in the market. Anything can happen. But so far, everything is according to plan. But do expect a bounce back into the 17,800s in the Dow. Then I think we come back to lower lows. I hope that helps you.
Yes, it does, Basil. And I just want to say that, you're a great technician. You have a great show. And, it's hard, again, for me to do it with all the hours I work. But I listen to the archives, and I'm always learning from everything you teach. And also I'd like to add that, what else really makes your show is you have a lot of great callers that call in and contribute. And I'd especially like to thank Scott from Safety Harbor, because he brought to my attention, Alcoa and Potash and X. And I've gotten some good trades with them. In fact, I wouldn't even mind sending a thank you letter to him, and maybe you could forward it off to him.
I absolutely. I'm very comfortable with that. He's really been I loved his progress over the years, and he's managed to keep his ego intact, because it's real tough when you're doing well not to pat yourself on the back, and when you take your hands off the wheel, that's when you hit the tree. You know my expression. So I thank you. And you too, you've always asked great questions, and I always keep you in mind, because people who are at work, it's really tough just to not know what's going on, try to put your positions on. So thank you very much, Mike. And we'll be watching this together. Don't worry.
Okay. Thanks again for everything, Basil. Have a good weekend.
Thank you.
Bye.
Thank you. Have a great weekend. That's Mike in Ormond Beach. Let's go to Brent Martinez, another one of our wonderful callers. Brent, how are you?
Good morning, Basil. How are you?
I'm good. Thank you.
Very good. I had a quick footnote. I did take off a pretty big chunk of my ocean rig.
Oh, excellent. ORIG. ORIG. There it is. And it is now down after a peak E.
Yeah,
Nice.
I sold it yesterday at 250, 6,000 shares of it.
Oh, wonderful. Oh, that is a beauty. Congratulations. Very nice.
Thank you. I was calling today about the VIX, but in particular, specifically, I'm using the UVXY. I bought that yesterday at 1450. So
Whoa.
I have some shares of it, and I also bought some. I actually have options on it too, which is really super powered.
Cool. It's up $1.88 to 17.85. It's up 11%. Actually, it's fighting. It's 11.78, 11.83, 11.96, 12. It's moving like it was at an auction. So that's very good. Now, you realize this is just leg A in the UVXY, but because it is this is the 3 times long the volatility index, the percentage is a lot more than, say, just the VIX. Although the VIX is up 9% and this is up 12%. Whoa, okay, that's interesting. All right, well, what I'm going to say to you is you might want to use a strategy on the UVXY that is a little different to if you were just long a 1-to-1 or 2-to-1 VIX index. And the reason being that just a small movement, as we can see on the chart, as we're looking at it now, it's up 12.3%. As we're looking at it, the percentage move is so big that if you manage to take off a little bit and you put it back lower down, it gives you a little bit of a cushion. That way you've got a little kitty in which you can say, okay, I can take a little bit bigger stop now. But at this particular point, the fact that the Dow went from minus 100 and something to only minus 57, and now it's down at a minus 64, and the VIX and the TRIN, the short-term trading index, let me just move this away, is still only, now it's moved up. It's at $1.14. It's like somebody woke up and said, oh, ho hum, ho hum. Oh, Dow's down, S&P's down, New York Stock Exchange. I better move this up a little bit because it should be way higher. So that says to me there's still disbelief. There's still a lot of people that believe this market can push higher. So I think that short-term trading index is telling us that there's a chance that if there isn't any rally a little later on with the VIX index trading at 16.77, pulling back to 16.23 and then going under 16, we could close at the lows of the day in the market, and that'll make for a scary Monday as everybody gets very nervous. I like your position. I'm just going to say, if you close at the low of the day of the market and the high in the UVXY, you might want to take a little bit off right at the close.
I probably will. Thank you very much, Basil. Have a wonderful weekend, and always appreciate your help.
Congratulations. Terrific move. We'll be right back, folks.
Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I had a question about the New York Stock Exchange. What was the question? Question was, Bob asked, New York Stock Exchange wave leg is, what wave leg is it in? So this is very interesting. From the high that was made on November the 3rd in the New York Stock Exchange at 10,641, if I take the midpoint at that peak B right there on the 1st of February, the cycle date comes in exactly on the 27th of April. Most of the indices made their high on the 20th. But wait a minute. This went to a peak F in the Chapman wave right on the 27th at 10,593. 10,593 is just under the 10,641 high of November. It did a cycle date. It did a Chapman wave inside wedge. You see this gray line? I usually make it green, but there you are. It went right to the day perfectly. I almost forgot to look at this. And then it turned down very sharply. So it's gone within 3 days, it's gone from 10,593 to 10,381. 200 points, 210 points, very quick. And it's the MACD's turned down, just crossing down now, and the stochastic's gone from the 90% level down to the 84% level. I've got a down arrow because it's peak F. I shouldn't really put that in because I need the close of the day and also need to see the stochastic under 80%. But there are times where I put the down arrow in, as I did on this Dow chart right here. Oh, I didn't. I did it on my other chart of the Dow because all the technicals were already deteriorating and I made the peak D. So now what we're looking at is, the question is, peak F in the Chapman wave, that's the 6th highest peak. That's where you still got to be careful. Now, this is very interesting. I was going to bring this up, so thank you for the question because I'm liable to have moved on. That is a leg D, almost at the previous high. And that says that it's holding beautifully. The stochastic's at 93%. The MACD is good. That's why I think what we're looking at is a severe waterfall cascade right now. And then we're going to get the big test of support because it's all so sudden. Coming off the top with sudden bad news like this and accelerating like that says 2 things. One is that you've got the trigger just to push the camel's straw, just to push things over the cliff. But it also says to really build downside momentum, this is the kind of action you usually see halfway through the move. So coming right off the top says there's a lot of selling going on. And that's what we're looking at with the VIX index rallying. The other thing is when the VIX rallies as sharply as it has, so quickly, VIX.X, like this, look at that huge move, they invariably start to peter out And at 1681, I don't know if it's going to hit the 17.63 level just yet, maybe sometime next week. But look at the weekly chart. We wait for the end of the day. Anything can happen because there's still time for a rally. So I'm looking at this and I'm saying, okay, New York Stock Exchange Volatility Index is based on futures contracts of the New York Stock Exchange. But let's just go back to the NYA because it's very important to be looking at that monthly chart. Month now has fewer days to go, right? We've got 1 day to go. What have we got? When is the first? Well, whatever it is. The first is coming up real soon. Where's my little calendar that I have? Don't have it. Is Monday or Tuesday or something like that? So what we're looking at is that we're running out of time for the monthly chart. So far, it's a risk Saturday. Oh, good. This is the last day of the month. So this candle is going to be really important all the way across the board. And so far, the candles, look at the, oh, now we'll do the, so leg D in the weekly in the New York Stock Exchange, peak F in the daily. Peak D was made in the monthly, but now we're looking at a new leg A. I call it a gray A. I better change it to gray. All right. And now what we're looking at is the stochastic has turned up. The MACD is flattening out. This is the reason why I think that there's still room to go to answer the question that was asked before. Where are we? And the answer is that I think that we're still going to make all-time highs to go with that skyscraper theory. Boy, a bunch of people sent me the same thing I was talking about yesterday. The American copper buildings in Manhattan with that walkway between the two buildings. Kept asking my son when I was there last time. I said, what is that building? He says, yeah, I don't know. I asked my daughter, I said, do you know anything about, no. What building? And then they looked at it. It's just it's beautiful. Two buildings, actually. It looks like one when you're looking at it from the Whitney Museum down the bottom because it's completely blocked. But when you see it from Brooklyn, you see the two buildings. And what was really important is that this is the period of accessories where the accessories start to make up as much as the product. So they've got a walkway between the two buildings, a beautiful skywalk. What a view. Except it's got a lap pool, a 75-foot lap pool. On the one side, you've got the East River. Not bad. The other side, you've got the skyscrapers. It's just incredible. Okay, back to our story. So here's the monthly chart. I'm going to open it up nicely so we can see it. Folks, this weekend I will be sending out a lot of charts because we want to look at all these different sectors. Will the XLF hold? That's my thinking. It's going to be really important. So here's the let's go to the Dow, INDU. Since this is the last day, we can do it. What did I just do? INDU. Look at that. We went to, now, is this one of those tops that you got back in 2000? Look at the tops in 2000. You went from January 14th, I think it was, high of 11,497. And it just didn't give way. It just kept on coming down. And then it went almost to the high and then fell. So you made a series of slightly higher highs, slightly lower lows, slightly higher, until eventually, bam, it broke down and it went to the low that was made in October at the 71.97 level. Is this something we're looking at now? I don't think so. I don't think this pattern is the same. So I'm encouraged. I could be so wrong. I think there's still room to go higher. So that's based on the Dow. Look, the MACD's already starting to rally. Stochastic's rallying. Of course, we know the song, right? And high in April, shot down in May. SPX, and then it comes back in June. Remember, that's the song. SPX down 21. Look, 21.34, and then goes all the way to the recent high of 21.11. Just 23 points off the all-time high. And the MACD's improving. It's not as good as the Dow. Stochastic's quite good. So that's what I'm looking at. Look at the QQQ series. It was looking fantastic. Now it's one of the most vulnerable. And we're going to be watching. It's the only one now that's below the 9-period moving average in the monthly chart. MACD's negative, Stochastic's negative. Are there enough Dow stocks to fight this trend of the major players? I'm not sure. But we'll be watching this real closely. So here's another thing. IWM. Not bad. Just above the 9-period moving average. We'll see how it closes today. It's fighting to get back the former support that is now resistance. MACD's better. Stochastic's quite good. Oh, man, May's going to be such an important month. Now let's go to the IYT. Look at this. This, you see that trend line? See the falling X formation in the iShares of the Dow Jones Transportation Average Index Fund? MACD's flat. Stochastic is, I still haven't figured out how to stop this beeper. Anyway, the stochastic's good. And someone asked me about the IYR. Let's look at the IYR. Holding very nicely, only down at 115 on the monthly chart, flattening out. Oh, there's a lot to talk about, and we'll only have a few minutes. I'll be right back. Basil Chapman, Tiger Conditions Hour. Remember my opening call. That's my...
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. Now, I don't trade crude oil. I probably should trade it, but I don't. And so the question has been on WTI. I don't remember the symbol for WTI, but also I had a question here. Crude oil, please look at this contract and not the USO. This ETF deducts fees and never looks as strong as the commodity. I absolutely agree, but it's the best thing that I've got that's close to some kind of an ETF that tracks crude oil. So I'm going to look at the RBM, which is the New York Harbor Blend stock, RBOB, June contract, and it's in leg C. Now, the question I had before was, where do I think crude oil is going to go to? That's a really tough question because I think crude oil is just about to bump into the excessivity it's had on a short-term basis. A little bit, gold is different. Gold is looking at something, there's something going on that crude oil is different. So I'm going to just say I'm going to so that's leg C. That's the way I've got it right now in the daily. So I'm still thinking, same as my crude oil contract, it should go to a D. And 47.57 is the 200-period exponential moving average resistance. And the 200-period simple is 46.49. We've already gone above it. So I'm looking at it and I'm saying yes. Now, is this a major turnaround in crude oil? all I can say is I like to go step by step. The MACD is at 81%. If at the end, a week from today, Friday a week, if we're looking at crude oil and it has not broken 43.5 to 42.80 as key support, in fact, it's hanging in here and it's even made a new recovery high over 47.50, then I'm going to say yes. I think crude oil now has the possibility to go towards the, where was it? I had it gave me, oh, there it is. It's this candle, that little doji candle there that says 47.58 to 50.63. It's that candle, the candle of the 27th, the week of the 27th of November. That would be, for me, the area where you're going to see the most resistance, if it can get there. Next question was XAL. Let me just do the XAL. Now, you would expect with crude oil going up that the XAL, the airline, ARCA airline index, if I can ever type it in, XAL, would be suffering, and it is. It made a peak G. Actually, that's not a C, that's a G, and it's pulled back to the 200-period moving average. It actually looks quite weak in the daily. So it's at 88.43. Watch closely. If it takes out 87, that's a real problem. If it holds 87 Monday or Tuesday, could have a nice bounce, and the bounce could actually be quite strong. That will say the crude oil is going to pull back a little bit. So I'm trying to tie it together. So, folks, as we're wrapping up now, stay tuned for your swimming lessons. You've got great programming all day. INDU. I'm going to the Dow for the moment, trading at 17,692. If there's a rally attempt that fails, the VIX index will go from 1655. It could even hit 17 today. So it's really important between 150, that's 10 to 2, and 35 minutes past 2. If at that particular point there has been a successful attempt to rally and the Dow is now only down 96 points to 87 points, and the VIX is pulled back to about under 16, then you could see a little bit of a rally into the close. But as it stands right now, this is the match we've got. Check out my opening call over the weekend if you want to try it out. That is going to be our template for the next couple of weeks, and we're going to see. And the answer to the question, is it too late to short the 2 or 3 times Dow? I'm going to be doing an update at between 12:15 and 12:30 for my subscribers. I hardly ever do that. I feel it's necessary now. I just want to clear I want to get some things done before the weekend. And I'm just going to say, I believe based on this pattern, we will have a rally in the Dow sometime early next week towards the 17,800 to 17,850 level. I'd prefer to wait for that moment to consider adding to the short side. This is too risky to buy it now. I don't know why you'd be giving up a potential 80-point rally or even more in the market, and then maybe even Monday. Have patience. If I'm correct, you're going to be able to trade this in and out, and we'll be able to keep the core position. That's the best of both worlds. Okay, folks, have a wonderful weekend. Yes, I will be enjoying tennis. Thank you, Jane the Den. The crude oil, I said 47.50.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.